welcome to this edition of Closing Trades, right here on ET Now with me, Aisha Faridi. I've got Ajay Sharma as well joining in on the show, and it's been one of those listless days. You can't really, complain because yesterday we just wound up with the muhurat session with Diwali, and then tomorrow again you've got a trading off. So I wouldn't even read too much into the 70-point fall that you're currently seeing. Of course, it dipped a lot more than that and then recovered from there. But suffice to say, much like yesterday, today as well, the volumes are going to be very, very muted. Having said that, you are seeing specific moves, very, very stock specific, very earnings related as well. Case in point being a Glenmark, Biocon. These have all fallen after these numbers didn't quite match up with the street estimates. On the same hand, you've got Coal India, which is powering ahead by 5.25% of a move coming in. Hindustan Copper, BHEL, Canara Bank, the entire PSU theme stands robust. And why not, Ajay? You've got that dual upgrade coming in. What else could we have asked for?
Look at the way small cap and the mid cap part of the market doing, Aisha. Yes, you're right. The large caps are slightly listless and the volumes are lower than average, understandably slow ahead of the market holiday tomorrow. I mean, we were dragging our feet to work today, feeling so sleepy. But yes, it's the small cap, mid cap indices which have surged to the session's high right now. PSU, you spoke about it. What is interesting in today's session is that not only the PSU banks, the Canara banks of the world, etc., are rallying, but also the metal and mining PSUs. You've got BELs and BHELs of the world, the capital goods part of the PSUs. So overall, PSUs are rallying up right now. There's one section of the market which believe that this is still the undervalued end of the market and probably the best trade available right now as far as the continuity of the current government regime is concerned. If market starts factoring in that there will be a pre-election rally in the next 6 months and the BJP would come back in power, rather position yourself in PSUs because that will be, so that is also a thinking in the market. But yeah, the benchmarks are pretty misguiding right now. It's the small cap, mid cap and select areas which are doing well. Kunal is here with us, and along with that, Nuresh as well. Gentlemen, afternoon. So what do you see of the trade right now? What are your trading ideas in this kind of a market? Nuresh, let's start with you.
We're seeing a clean breakout happen. More so in the small cap and the mid cap banking space. So this is where I like Federal Bank. The stock was earlier an outperformer, dipped a bit with the markets, and now is back to a new 52-week high and an all-time high. One of the few mid-cap, small-cap banking names which has hit a new 52-week high as well as an all-time high. So looks set for a move towards 170 in the short term.
Yeah, that's the take coming in on which way the markets are headed. But, a double thumbs up coming in for India. First, you had that Morgan Stanley India upgrade coming in, and then the Goldman Sachs Asia strategy, amidst which they clearly are favoring India right now. In fact, just to talk about the contours of the Morgan Stanley note first, wherein they are saying that long term the story of India is gaining strength. They're saying that India is their key pick within the emerging market as well as the Asia Pacific Pac. They're saying the upcoming elections do point to higher volatility, but there is a 14% upside that they do see to the Sensex up until the run up to December 2024 in the base case scenario. They're saying multiple reasons for volumes to actually rise in 2024 once the event uncertainty, that's of the elections, is behind, and they are expecting equities to rise into 2024 elections. So quite interesting, Ajay, because they're also making a case for the pre-election rally, and they're saying that once the event risk is over, you're going to see more and more inflows coming in.
Well, Aisha, I was talking to some market guys who track election and all these things also very closely, because the medium term it does matter. Yeah. You cannot wish it away. Any election, US elections or India election, that it doesn't matter at all. It doesn't matter if you are a 5-10 year player. It does matter if you are a 5-week or 5-month player. Sure. The point is that there's a case for pre-election main rally, but between now and first week of December there are 5 state elections. The narrative so far, and I think Kunal would also agree here, was that all the state elections will not go BJP way. Yeah. It's the national election where the hype. Victory. But what if there is a case of 1 or 2 state elections coming BJP's way? That's not in the price. Yeah. So there actually could be a case where earnings actually could surprise on the upside because worst is already priced in. Who knows? But we'll talk about all of that. Right now the complexion of the gain seem to be suggesting, and now you also have the Goldman India call coming in. Aisha spoke about Morgan Stanley. And it is rather to be, you should regret taking position and seeing your prices be 10% lower rather than chasing 10% higher. Goldman says that it's the comparative trade which will favor India. China is becoming weak and a lot of money will actually come out. That's why they have downgraded China and have actually upgraded India, saying it's a more structural kind of a play right now. Pashupati Advani is also joining us. Pashupati, you must be listening to our chat. Aisha and I were discussing two big upgrades have come in today. One from Morgan Stanley, the other from Goldman. But largely the gist of it is, barring the election volatility, the elements of the market look okay. Would you agree to that? What is your reading? Have you had a view on these two notes?
I agree. I haven't seen these two notes because they've just come over the weekend. But, I definitely agree. But the thing that concerns me is that there is some FPI selling still going on, the net. So, I think that is not a good sign. But I think that could also be because people are trying to profit book before the end of November and get their NAVs, there. And then, maybe we'll get a good January effect like we've had probably 8 years out of 10. So, I think we're off to the races. Definitely the comparative trade between India and China looks better for India. But we are also, on the higher side. And so therefore people are taking profits against their overall emerging markets portfolios, which, have some dogs in it because of Russia and because of, what's happened in the Middle East. They've probably lost some money there. So they're trying to book some profits in the year 2023 because most of the funds are on calendar year. So those are my thoughts.
Okay, in fact, that one space which continues to be charged up ahead, and that's clearly the small cap index. There's much conjecture and, doubt there would be in the market that maybe small caps have actually peaked out already for the year, but there's really no stopping the small or, for that matter, the mid caps. On a consecutive basis, you've got the small cap index making fresh highs, and I don't think today is any different when you've got a very, very muted large cap move. But look at what the mid and the small caps are up to, in particular the small caps. Kunal, specifically talking about the mid and the small cap spaces, 5 stocks that you think that you can buy and forget for the next 1 year. Election, no election, you think that those charts are looking that solid that they would digest any sort of event risk?
Well, I'm not sure small caps particularly as such, but there are PSU names which are standing out. I think some of the names like NMDC, Hindustan Copper, we don't talk of these stocks in the same light, but these stocks are showing some classical breakouts as such on the charts. Coal India is something which we discussed earlier. I think this could be a start of a huge uptrend for Coal India. I think the stock has just factored in maybe a 20% rise so far in the last 2-3 months. I expect much bigger returns for the stock. The PSU banking basket itself looking quite charged up. So there was this phase in 2022 end where these PSU banking stocks have rallied. I sense that this could be a second leg of a strong uptrend and a huge uptrend for the PSU banking stocks. So not sure of exactly the small cap names, but I think there are a lot many options to choose from.
Pashupati, I was just talking about how PSU banks, of course, have gone through their fair share of consolidation even after good results. Look at SBI, it's not even able to cross the 620, the recent peak. Some others have had similar fate. But still the sense is that the capital goods, mining PSUs where efficiencies are coming now, they could be, good plays even from here on. Which end of the PSU basket do you favor at these levels?
I'll tell you, what the government is doing is it's very clear. It needs to spend on infrastructure to make sure that there's job creation. So anything in infra that is going to come along would be a good place to be. On the other hand, you talk about the other PSUs, they also want dividend. So from the ones that are actually generating good cash flow, they want to try and promote those. And they're also trying to do divestment. So the juicy ones, which have got high earnings, high dividend payouts, those are the ones that look attractive, I would rather not go into the list of names, but they're out there. You can do your own research and see which are the ones paying high dividend and which are the ones that actually are making good earnings. And anything obviously leaning towards defense have got an extra boost this year because government is spending more in defense, and these guys will also get better earnings and also make higher dividend payouts. So that's my thought on the PSU bucket.
Okay, stay with us, Pashupati. Lots to talk about. For now, it's the small caps which are looking bright, and even the Nifty has actually recovered some bit of lost ground from earlier today. We're back at that 19,500 print for the futures. We'll take a very quick break.
So there's one particular stock which is doing phenomenally well. Okay, we are going to Page Industries first because Morgan Stanley has initiated a tactical idea on Page. even Aditya Birla Fashion. Lisa's here. Page is down by 3%. Aditya Birla Fashion also not doing a whole lot today. But what exactly is the case Morgan Stanley sees in both these stocks? Lisa?
Yes, so Morgan Stanley, they have come out with a tactical note on Page Industries as well as Aditya Birla Fashion. Let's look at their rationale on Page Industries. Well, they say that they have maintained an overweight on Page Industry with a target price of 43,814, and they believe that the share price that will rise in absolute terms over the next 60 days. Though the demand in Q2 has been weak, but going forward, they see three silver linings from the result. First, that management is confident that it has not lost on any retail shelf space, and despite the top level weakness, it has maintained a strong EBITDA margin of around 20%. And also the distributor level inventory deals, that has also eased off, so that will support the growth going forward in the future. Well, now coming to Aditya Birla Fashion, what they say on Aditya Birla, they are quite underweight on the stock with a target price of around 176. Now they believe that this share price that will fall relative to the country index over the next few days. Now the rationale behind that is that the core business and their acquired TCNS clothing business that reported a weak Q2 numbers, but they are hopeful that the festive demand going forward that will improve their sequential growth, and but the balance sheet that has been quite weak, so that will likely weigh on the stock performance. So that's the tactical note which has come up by Morgan Stanley on Page Industries as well as Aditya Birla Fashion.
Right, okay, Lisa, we'll leave it at that. In fact, Ashesha is here to highlight a note coming in from the House of Jeffries and Coal India and why they too are convinced about this being a multi-bagger from here also.
Well, yes, Coal India has reported better than expected set of numbers. Revenues are up 10% on a year-on-year basis. Company has reported EBITDA margins at 24.8% versus ET now poll of 23.4%. So much better across parameters and very strong set of numbers. Remember, offtake too has seen an uptick of about 13% on a year-on-year basis. And in the quarter gone by, e-auction volumes rose by about 53% on a year-on-year basis. And that is what aided Coal India's numbers this time around. Jeffries has come out with a note where they have upgraded the stock to a buy from their earlier hold rating. They have increased their target price from 240 to 385. They say volumes offset the impact of lower e-auction prices and higher staff costs in the second quarter. Volume growth trajectory has improved, and Jeffries believes that volume growth trajectory is expected to sustain in the coming quarters on account of higher demand from the power sector. They've also increased their EPS estimates for 24 to 26 anywhere between 18 to 42%, and they also believe that the valuations are pretty attractive. So for now, they've upgraded the stock to a buy rating with a revised target price of 385. So on the back of strong set of results, an upgrade that has come in from Jeffries, this counter is gaining in trade today.
Right. Pashupati, the way Coal India is being seen in a new light right now, look at how NTPC is surged to almost a 14-year high. Does it appear that this ESG kind of a discount, which some of these legacy power energy companies like NTPC and Coal India were getting, all of that has peaked out and market is taking a fresh look at these kind of plays?
For sure that the ESG factor has become a little less and people are beginning to be a little bit soft on it. But again, Coal India is a typical company where it has very high, it has high earnings, high good cash flow, and is a typical candidate for a dividend, high dividend. So I think it's, it's definitely going to get better result and then probably declare a dividend in March or maybe April based on this year. And, it's part of the government's philosophy of getting money back. So they're going to spend money on the left hand. On the right hand, they want dividends and disinvestment. So Coal India is the best candidate for getting the dividends and perhaps even selling off a few percent of stock into the market. So that's a possibility as well.
Pashupati, which has really emerged back, so to speak, after that, hate time that they had post the COVID outbreak has been pharmaceuticals, right? We were just looking at the IPM value growth, that's clearly doubled versus what we saw in the month of September. And these are just the October figures that I'm talking about so far. Volume growth as well has shot up quite a fair bit. You've got elevated pollution, abrupt seasonality, etc., which has clearly led to, earnings for some of these companies. Sun Pharma, Mankind, JB Pharma, Ipca have already managed to beat the IPM growth. Just wanted to understand whether, you're tactically looking at any of these pharma plays.
Actually, I've liked the pharma sector for a long time, and unfortunately, watched it go down for whatever reason. Probably mainly because of the fact that they were all getting what I call bad chits from the US FDA, and they're having to fix their facilities. But having fixed them, having got them back on track, those companies are back, and back to solid growth. And you've mentioned Sun Pharma as one of them. They had to digest the Ranbaxy, acquisition, and then they had some problem with one of the plants that came with it, but they fixed it, and everything has been changed for state-of-the-art equipment. So we're off to the races. So I think it's fantastic for the whole Indian pharma industry as a group, and I think they've all got their act together, and those that are not, the rest of the industry is pushing them. So it's probably a good sector definitely to be in, and I'm very comfortable with whatever shareholdings I have in that sector.
Okay, in fact, let's hear out Ravi Dharmshi as well. He understands pharma a lot, and here's what he has to say about how he's reading into the sector now.
Pharma can be now, see, there was a time where you could paint all the companies with the same brush. It was a rising tide. Now it is not the case. It is more a stock pickers sector, I would say. You can divide the sectors amongst US focused generic players. Within that, oral solids plays or specialized plays like inhalers or biosimilars or specialty generics. Then there are domestic focused companies like domestic branded generics or diagnostics, healthcare, which is hospitals. Those are broadly the segment. And then there is CDMO, which is the new and upcoming segment. So those are the segments within pharma. And what the area that we don't like is the US focused, generic formulation players focused on oral solids. So we are looking for pockets of opportunities within pharma, but we are not trying to play the reversion to mean in the US focused generic players.
Some of the US focused generic players like Oro, Lupin, Cipla have improved their commentary. Then the stocks have also done well recently. But let's see. Let's talk about some of the other players. BHEL, BEL. Both of the stocks are doing very well, and they are the classic capital goods kind of a play from the PSU basket. You spoke about infra, Pashupati. Up till now, we have seen the Siemens ABB version, the private sector, large capital good guys, which have really done very well, Cummins as well, on market as well as earnings. The PSU basket has been mixed. But would you take a bet here?
BEML is a good stock. It's fundamentally being run properly, and it's doing well. They've also got a niche where they're going into some new technologies, which also has been very innovative from the government side. And I think that it's again, high earnings, high dividend, and therefore another candidate for potential disinvestment also for some small amount of stake. So it ticks all the buttons. I see a lot of we've been in the IPO market for a little bit of time, but we haven't seen too many government IPOs. I think we'll probably see some government IPOs in the first quarter of 24, and let's see what happens. And I think that's good for all concerned because it'll have more paper in the market.
Pashupati, great to have you on the show, and wish you a very happy Diwali as well from all of us.
Thank you very much.
Okay, rebalancing for the MSCI index as well is going to be announced on November 15th, and there'll be a lot of flows also which will come 30th of November. Which are the key stocks that are going to be in focus? Samit is here with all that list.
Well, the MSCI announcement will come in on November 15th early morning. So the stocks are most likely to react on the November 15th trading day. The stocks that should be in focus: firstly, IndusInd Bank, $290 million of inflows are expected, which is nearly 4 times its 20-day average volume. Apart from that, it's Suzlon, Persistent, APL Apollo, Polycap, Macrotech, Tata Motors, DVR, Paytm and Tata Communications, which are expected to see an inflow of anywhere between 160 to 260 million US dollars, which is nearly 5 to 13 times that 20-day average volume. Now, this is all the changes, all the inclusions that will happen on the MSCI Global Standard Index. And when it comes to the MSCI Small Cap Index, on the inclusion side, only 2 stocks that one should keep an eye out for. Firstly, it's Gateway Distriparks and Lloyd's Engineer. Now, around $4 to $5 million of inflows are expected, which is nearly 2.5 to 4.4 times the 20-day average volume. And Jindal Stainless, Dalmia Bharat, Lind India, Thermax, ACC and Indian Bank would be in focus on the outflow side. Nearly 14 to 23 million US dollars of outflows are expected in these stocks, which is nearly 2 to 7 times the 20-day average volume. So keep an eye out for these stocks in trade on the back of MSCI announcement that is expected to come in on November 15th early morning.
That we will. Samit, thanks for highlighting all those details. In fact, on that note, let me also get in some more trading strategies too, and closing trades at that. Naresh, what is it that your list looks like?
So looking at names in the mid-cap banking space, so Federal Bank remains the top bet, and the other one is a momentum bet on Tata Power.
Okay, Federal Bank, that's a buy, and a momentum bet coming in on Tata Power as well. Kunal, what about your stock ideas?
I'll go for Coal India as a whole. I've recommended the stock. I think looks attractive. In fact, typically at such kind of 2-3 days of sharp overbought prices, we expect the indicators to be overbought, but that's not the case for Coal India. So still looks attractive and would look out for much more stronger upside over the next couple of days.
Okay, as we slip into a quick break then, let's hear it out from Nilesh Shah from Envision Capital as well. And he's talking about 3 of his big bets for somewhat 2080.
Especially Radico, Sula. In the financials, I think Home First Financial. Okay. That's a tech-driven, affordable mortgage lender. I think these are the kind of businesses which I think will continue to grow and remain.
On the first on the value.
Radico, Sula,
I mean, Nikunj, because I think by 3 years, I think maybe yet for the next 10-20 years, the whole alcoholic beverages business will continue to grow. We probably are just at the start of this cycle.
Back with closing trades right here in ET now. The closing trades are looking okay. I'm sure the volumes are going to be a lot more muted than what we are used to. But at 19,451 with the small caps already clocking a fresh high, I don't think you have much reason to complain. And especially given the kind of charge-up activity within the PSU pack. I mean, pick up any stock, Hindustan Copper, BHEL, Coal India, PFC, you can go on with the list, NTPC, they're all holding out just so strongly. Deepak Shenoy as well joins in on the show. Deepak, hi, afternoon, good to have you on the show and wish you a very happy Diwali from all of us here.
Thanks so much, Aisha, and wish you all a happy Diwali, a wonderful new year and the year ahead as well.
Is it going to be as wonderful as we think it's going to be? Because there will be a lot of those unknowns as well, right, Deepak? Because you'll have a big election event too.
It is, in fact, what's life without a little unknowns, right? You can't have a straight path to everything. So there's going to be a non-straight path to glory. And I hope next year is going to be, both volatile, but also exciting enough for us to discover great businesses.
Deepak, I'm sure you're getting a lot of flows and you wouldn't want to buy by chasing stock prices. You would welcome volatility, isn't it? How's the buying list looking like right now? Are you shopping in PSUs? Because that seemed to have come alive in almost on the entire basket. PSU banks, capital goods, mining, energy, everything is gaining.
Absolutely. I think even Coal India is up like some crazy percent in the last year. But much about this, I think, has come from the re-rating of PSUs has happened due to a number of factors. In the power sector, for instance, we've had a re-rating because the power economics around the lending businesses in power has changed because of a lot of policies in the last few years. Markets come to realize that. I think this will also happen in a bunch of other businesses where government control hasn't necessarily meant doing bad things. However, I think my shopping list still consists of a lot more of the manufacturing businesses, people who make stuff in India. I think that's still going to get the maximum fillip both from the PLI changes in the last year and also from relatively low tax rates plus import duties that have been imposed on imported goods in general, which is about 10%. But I believe this is going to be the maximum, import substitution through local manufacturing is going to be the biggest beneficiary. But then elections come, might change things. So we have to be watchful for any changes in policy. Beyond that, I would say, still quite excited about defense and railways. I think long way to go here. So still focusing on some of those products. Travel and tourism remains one of our focus areas. So some of the stocks we bought are in the tech sector in those areas. But then, I think overall, I think tourism will continue to do well. As you can see, I think this is holiday season. You can't find a place to go anywhere without paying what seems to be exorbitant rates, but inflation adjusted over 10 years, it's not so much. So I think all these businesses will do well in the coming year.
Right. In fact, since we're on the subject of PSUs, let's try and understand a lot better as to where is it that you find value and where are pockets of exuberance within PSUs as well. Big question mark on railways, defense, even to some degree the power sector as well. So let's hear it out from some of the experts.
So I think power, what has happened, India's power demand will grow at a fairly decent pace, because adoption of ACs in India is only 5%, and as income levels grow, discretionary spends grow, air conditioning will consume lot of power, manufacturing will consume lot of power, economy is growing in any case. This electrification will consume significant amounts of power. So I think this is what I have been saying all along, that this sector was misunderstood, and see, the right to win in power sector is with companies that borrow at the cheapest rate. If there are 3 companies and all put up solar plants or all put up wind plants, the cost of panel, the land, everything is practically the same. The difference can come from cost of borrowing, because these are projects that are typically 70-80% funded through debt. So someone who borrows half, 1 or 2% cheaper is likely to be a winner. The ROEs will be higher.
I think there's significant appreciation which has happened. I wouldn't basket it saying that it is all over. There will be individual companies. Maybe the pace of growth, pace of returns will be definitely not as good as it has happened in the. Let me give you some data. In the entire PSU basket, 3 years back, market cap was 14 lakh crores. 3 years later, the entire basket is 45 lakh crores. But there are individual companies within this basket, of course, they have given like 500, 800, 1000%, 1500%, 200, 2000% returns, right? So I think, to say that the entire rally, and this is clearly the leader of this market. PSUs are clearly the leader of the market. I still feel that, PSU banks are quite compelling. They are still trading at 4-5 times PE, less than 1 time book value, if I have a 2-year perspective. How can they peak out when the earnings cycle is still so strong?
See, some of the businesses are very good. Some of the companies are also very uniquely positioned, monopolistic condition. They have asset light. They have unique, IPRs with them, and government cannot do without them. And in that side, there's a lot of build-up like defense and all. I think there is a long-term trend to allocate more for this thing, build up defense, and these defense companies are monopolistic, though they are public sector, so there is a little bit of challenge in terms of, but the well-run public sectors, monopolistic, high return on capital and all, and their dividend policy is better than private sector. So I think you have an opportunity there, but now they are no more like 2 years back the kind of valuation you had. वहाँ से काफ़ी ये होगा, so you have to be a little more careful which ones you are doing, where is the action, so you have to understand company wise.
Deepak, you spoke about travel and tourism industry and why it appears to be in a very good sweet spot for growth. Do you also own Indigo? And if yes, I'm confused why the stock is trading at 11 times forward, virtually a monopoly in the space. With good growth, PLI, the load factors are not coming down, but still for 8,000 crore kind of profit making potential trades at 95,000 odd. Is it cheap or is it fully valued?
Fair, I think this is one of those places where I don't like to invest. Whenever there is a profit pool in airlines, and this is probably worldwide, somebody comes and ruins the economics. Somebody will come as a new player, undercut prices, because the point is to fill planes. You have to fill them, otherwise you don't make a profit. And if somebody else comes in and undercuts planes, they just go on a war footing to compete, and then everybody loses money. This happens every 4 or 5 years. Whether it was the Jet saga, after Jet there was Indigo that started, and then there was a bunch of airlines that came. There was Kingfisher. There was almost a lot of these players have gone bust along the way. and they were all leaders and winners at some point in time. And I think that's one of the reason why and right now crude prices are benign. Whenever there's a jump in crude prices, you'll see Indigo start making losses. We've seen this in the past. I'm not saying this just because I think it, but every time in the past when you've had a spike in crude prices, it almost directly affects the bottom line for Indigo. So given the volatility, I think the market prices them at a lower number. So the 8,000 crores you speak about can quickly become minus 2,000 crores in some quarter. So you kind of balance that out, and then kind of it actually normalized to these extremes. It's actually trading at a probably 25 to 30 times earnings, which is where I think markets have priced it traditionally. So I don't think this is an undervalued stock, but I also I don't like the opportunity because of such external based volatility that seems to happen all the time in the airline industry.
Where within the rest of the discretionary spend basket, Deepak, are you bullish? I mean, across the spectrum, right from real estate to shoes.
Oh yeah, this in fact probably shoes is better than real estate, but to be fair, yeah, the brand visibility in the shoes and consumer demand sector over there's a lot more brands there. In real estate, I think in the near term we will see a lot more. We will see a lot of activity, and the way the accounting goes, the results for real estate companies will probably be good for next year. If interest rates increase, then buyers will start to compress.
Did you manage to look at this latest debut on the primary market, Protean eGovTech? It saw a very muted listing, just 1 to 2% this morning after a 24 times subscription. But it now appears 11% higher. The unmet demand from the subscription appears to be coming. But have you looked at this one, earlier known as NSDL e-governance?
Oh yeah, in fact we use them, but we haven't. We don't subscribe to IPOs as a portfolio management company. We can't. But so one of the things over here is to usually wait for a quarter to see how results pan out. I think this is going to be a slowish growth company in general, not because of anything else, because of the regulatory interface and the way things are. After you reach a certain scale, you will only grow at the kind of either by increasing prices or by the growth rate of the number of companies in India, which is relatively low, low percentages, probably high single-digit percentages. So I would say not a very high growth company, so don't want to pay too much for it. But I think probably in the longer term will be a good dividend player. But we'll have to wait and watch for results and to see if anything have changed after their results. I don't know when they will announce it, to be fair. I haven't done, it may take another quarter, but we'll take a look after that. Usually the quarter after the IPO gives us the best. Pre-IPO, the IPO, over supply or over demand does not seem to reflect in listings. As Mamaearth also pointed out, there were 7 times, I think, oversubscribed, or 4 or 5 times oversubscribed, but the market price remained the same. So, that hasn't been recently a useful indicator of what will happen on listing day.
But, Deepak, you are an insider of the market. Don't get me wrong, but you are a participant in the market. So you exactly know what parts of the market infrastructure are doing very well. Protean is actually, that side of the market where the government is actually wanting to do a lot of infrastructure creation in the east side. But I'll come to the other side of the infrastructure, CDSL, NSDL, some of the high growth technology backed brokerages. We know the data out there. You're also in the market. Would you like to play that financialization and the new gen investor embracing market, that part in your portfolio anywhere?
Yes, there's quite a bit. In fact, we have some of the RTAs, the registrar and travel agent listed players. We have an exchange. We don't have CDSL just yet. I think CDSL, the data was showing a little bit of slowing down of growth rate of accounts. So they'll have to make more money on transactions. The growth in F&O and the options, craziness that's been happening in the markets, I think will benefit the brokers and exchanges first. It will then downstream onto RTAs and perhaps later onto companies like CDSL and NSDL. So we'd want to wait for, I don't know if NSDL is listed yet, but we typically we've had a position in CDSL in the past, but right now we're focusing on the other players. We'll build more. Market infrastructure is just going to be, huge going forward, given that everybody in the regulated space, whether it is SEBI, the government, or even RBI, wants more and more players and debt offerings also to be listed, and for exchanges to be the primary role for intermediating transactions. This is going to be a very, very solid thing for everyone in the field. Next 10 years, I think this field itself will grow 10x. So we should, we should participate. So we have a little bit of our foot in the door, not all of it.
Okay, that's the, play coming in on, some of these market-linked stocks, if you want to generically call them that. Just looking at some of the losers as well today. And, Deepak, we've addressed this time and again as to how the grand old blue chips have completely, sort of eluded the market, the likes of HDFC Bank, the likes of Reliance. And you've been quite bullish in Reliance. Tell me, where do you actually see a big trigger coming in from Reliance? Or do you think Reliance is going to be one of those stories which is consolidated up until now, but if the market moves up, it's going to move Reliance along with it, instead of being the other way around?
Yes, I mean, it's interesting that you say that. It's one of our largest positions, and honestly, not been such a great return in the last year or year and a half. But here's what I think: it's a combination of both a special situation, and I think where the Indian consumption story and the Indian telecom story is going to go. So it's a combination of the two. The special situation is in the demergers. They've already demerged Jio Financial, so that's about a 200 rupee stock price that you don't see right now because it's fallen by 200 rupees because of that. But it's also the fact that they have retail, they have telecom, they have the old oil to commerce business, and a bunch of other investments, media, and so on. If you were to demerge these sensibly over time, I think having 2 or 3 entities, and eventually the torch bearers of the entities are already, I think, being recognized. The idea will be that each of them will individually be more worth, the sum of them individually will be worth more than what Reliance is today, and substantially more, because then you can focus on a business and it will provide more capital for the group going forward. I think that is where I think the value is, and I think they will demerge these businesses rather than list them in an IPO and become a holding company. That will actually provide a lot of value for shareholders. On the actual business front, you're talking about behemoth businesses like Reliance Retail, which is probably the largest retail entity in the country now and reasonably profitable. The profit margins have been growing, both store headcount has been growing, and pretty much all the operation metrics have been improving. Telecom, which has kind of stalled a bit, but I think that's just waiting for a next trigger to move up, which is more 5G penetration, more usage. You can see now how much demand there is of online-based streaming, whether it is video, sports, pretty much anything. And then you've got the oil-to-consumer business, which is simply the largest petrochem business in India. So you still have a lot of petrochem usage, and I think that plus some of their green energy initiatives provides more impetus to both pretty much everyone in the energy cycle. I'm very biased because we're long it, but I think this is going to be a lot more valuable in the future. We just have to wait. I don't mind waiting a long time. We don't generally pick a stock only for a year, but a situation that can last 5 or 10 years, and we're comfortable holding until the situation reveals itself.
Where do you think in the next 1 year, Deepak, the profit pool is going to get generated? Is it going to be more of the same as has been the case in the fag end of the last year? I mean, somewhat to somewhat that is. And that's your infrastructure, manufacturing. Is that the space where you think the maximum earnings growth is going to be coming out from?
That's interesting. I think from a percentage perspective, that is true, because I think manufacturing businesses in general, if you see the leverage ratios in these businesses, they've been coming down substantially. So right now they have the ability to both take on a little bit of leverage and to allow the profit margins to actually demonstrate themselves as they pay down debt. So I think the next year will continue to be a year for a lot of primary manufacturing businesses. And in some sectors there will be relatively extraordinarily large profits, including defense and railways. I think their profit pools expand primarily because they've been so small earlier. But they're also, I think in the banking sector, you're going to see some profit pool expansion because this year has been one of margin contraction. The next year will normalize a little more. So you're going to see the financials do a little bit better, especially the top level. There will be a degree difference between the top level financial players and the MFIs, the smaller players. That will actually take some more part of the profit pool. I also think auto will return, so we should see some reasonable profit growth in auto. But then I've been saying that for 3 years, pretty much broken record, so don't believe me much on that one. So I think these are the 3 areas I think it'll be very interesting. On the services sector, I still like tourism, the hotel sector, tech plays in the hospitality sector and so on.
There's one company, I think, which provides technology purely for hotel sector and luxury hospitality. But let's move on and get some trading ideas, the BTST trading ideas, though tomorrow is a market holiday. But still, Kunal, what would your names look like?
So I'll go with PSU names. Canara Bank is the first stock which I would suggest as a buy. Stock breaking past above a bullish flag pattern. This seems to be a strong breakout candidate over the near term. Would suggest a buy with 440 as target. Stop loss at 390. And BHL is the other candidate, which is also confirmed a very smart kind of an inverted head and shoulder pattern on the daily chart. So would expect at least another 10% up move for the stock. 150 as a target. Stop loss at 130.
Right. Naresh, what about your BTST trades?
So first is the buy on Federal Bank, a new 52-week high, fresh breakout, good momentum. Stop loss at 151, and a target price of 158. Second is a buy on Tata Power, breaking out above swing highs of the last couple of weeks. Stop loss at 256, target price of 264.
Deepak, you were talking about financials, right? So current profit pool is the biggest contributor right now in corporate India. But there is one section of the market which is, kind of getting uncomfortable about it, saying that probably the NIMs are peaking out. Is that a justified concern, or it is just a matter of quarter or two and then things will rebound once rate cut cycle starts in India as well?
So I think NIMs will contract or have contracted already, but they will probably contract another 1 or 2% for some of the larger NBFCs also. The spreads between government securities and NBFC borrowing yields are relatively low today. I think when interest rates start to go down, this spread will increase. So they will continue to pay relatively higher rates. The government will pay lower rates just by the nature of the time at which RBI will reduce rates will be at a time of a relatively high crisis as a kind of a situation. So the spreads will widen. So I don't think the NIMs will come down next year. I think, I don't think the NIMs will go up next year. But I think as an absolute amount, they might end up making more profit simply because of market share and the lack of ability of the smaller participants to be able to raise capital at reasonable rates will push more money towards the larger NBFCs and to some of the banks as well. So while I say this, I mean, again, nobody knows what will happen. So if worldwide there's a crisis, then most of this analysis can kind of go for a toss, because at some rate capital outflow from India will be huge, and that's one of the reasons why financials haven't done well. The FIs are taking their money out, and FIs are mostly focused on the financials. So the big banks, most of the big banks, haven't done so well in the last year versus some of the other industrial players. So where more Indian domestic participation is happening. So I think that way the stock prices might see a different trajectory.
Got that. Interesting. Deepak, great to have you in the show as always. We'll let you go on that note. Glad that you could take time out. Let's just revisit what the closing trades are settling in at. Just mildly soft. Doing nothing really. Just been stuck in a very, very narrow band from the high to the low of the day. On that note, we're going to take a very quick break. As we do that, let's hear it out from Ravi Dharamshi as to what he's making of the markets right now.
pharma can be now. See, there was a time where you could paint all the companies with the same brush. It was a rising tide. Now it is not the case. It is more a stock pickers sector, I would say. You can divide the sectors amongst US focused generic players. Within that, oral solids players or specialized players like inhalers or biosimilars or specialty generics. Then there are domestic focused companies like domestic branded generics or diagnostics, healthcare, which is hospitals. Those are the broadly the segment. And then there is CDMO, which is the new and upcoming segment. So those are the segments within pharma. And what the area that we don't like is the US focused, generic formulation players focused on oral solids. If there is an injectable focused or an inhaler focused or biosimilar focused, that is a little bit more specialized. Or you pick, we have picked up 1-2 companies in the pharma space which are very, very, very specialized. You don't find those kind of, you cannot say it's the same healthcare space. A contrast media company, or if that be, like an API, fermentation-based API company, those are very, very different. The drivers are very different from most of the other pharma companies. So we are looking for pockets of opportunities within pharma, but we are not trying to play the reversion to mean in the US focused generic players.
So Ravi, I just want to bring this point out for our viewers, which is that we are talking about mega themes here. For example, whether it is EV or whether it is energy transition or whether it is manufacturing. Some of these stocks have gone up 3-4x, but if you still feel that these are multi-year themes, those who own them, should they sell them? Because the obvious question is that the P multiples are north of 50-60. Now this is a sector where growth is there, but the P multiples have also gone higher. So the temptation to book profit is obvious. So why should one not book profits in these stocks which have already run up and where P multiples are expensive?
No, I think this is the most difficult and the hardest part about wealth creation. So yes, you will not go broke taking profits, but at the same time, if you want to really create wealth, one has to develop the conviction beyond this. And anytime you have 10, 20, 30 bagger kind of a stock in your portfolio, it will go through its periods of expensive valuation and probably 2-3 years of period of where the wealth is not created. So living through that period is the most difficult thing, but at the same time the most rewarding in the long run. So there will come a time where probably your cost of acquisition you'll end up getting as dividend, or the daily price movement of your cost of acquisition is that big, that high difference. So I would say that don't focus on the current earnings based multiple. Focus on what is the size of opportunity and where are we in that cycle. If the cycle has just begun, then you should not be in a hurry to book out your profits. If you are getting anxious about the profits, book 10%, 20%, 30%, whatever that gives you the confidence to hold on to the longer term from here as well. And I think that is how you will be able to hold for a long period of time and enjoy the benefits of wealth creation. So, I am strongly of the opinion that it is never the, identifying the stock that makes you money. It is your sitting through the periods of turbulence and coming out on top in the larger trend that makes you the big wealth.
Okay, pharmaceutical, that seems to be quite the evident pick. Naresh, what within pharma do you think one can buy right now?
So the first one is to go with the larger names, which is where Sun Pharma is coming at an 8-year high. Then you have Dr. Reddy's, which is consolidating. So those are the names. And then on the downside, you have something like a Wockhardt Pharma, which is a stock which has fallen from 2000 all the way to 150 to 250 levels. That's a stock which is turning around. So one can create a basket of the heavyweights and the turnaround names like a Wockhardt Pharma or something like a Biocon.
Wockhardt, Biocon, these seem to be some of the top ideas from within the broader end of the market, within pharmaceuticals, of course. Canara Bank has got to go down as one of the star performers today. MCX has had quite the dream run, about a 5% uptick coming in there. Coal India stock, which Kunal has flagged off pretty much throughout the day and the last many trading sessions as well. 6% higher is where it's starting shop finally. There's, of course, BHEL, another 6% dash coming in there. Hindustan Copper, big move there. Almost an 8.5% move is what you've, seeing on that one. There's PFC, REC, there's NTPC, which is closing in with a 1.25% gain. So the entire PSU pack has been very, very charged up. Not quite the case, though, when it came to IT, of course, and even private banks. They continue to really slacken. So ICICI Bank has been down about 0.6%. Axis as well has been a laggard today. Similar as the case been with an HDFC Bank as well. And of course, the big boy Reliance as well did not really do anything in today's trading session. But Kunal, a day's break tomorrow. What should be the strategy come Wednesday?
Hold on to long positions. There is no, reason to try and decrease or maybe square off your long positions. I think the mid cap in the market is doing exceptionally well. So I think the same old last 1 week, 2 weeks of theme that few large cap names are making the moves on the indices, benchmark indices, a bit more difficult on the upside. But I think when you look at the mid caps and the tier to large cap names, there's a free flowing trend across many of these spaces. So I think it's best to concentrate there.
Okay, that's pretty much it for the day then. Let's also check in on what Protean is up to, because it had a very quiet start and then the stock, of course, shot up quite a fair bit. It's finally settling around that 882 price point, and that's a premium of about 11.5% coming in on Protean today. That said, let's also mark some of the laggards. Page Industries, even though it's one of the conviction ideas from a global brokerage firm, it's closing in down about 3.5%. Emphasis, Balrampur Chini, Abbott India, and then Glenmark too, which has lost about almost 5% in today's trading session. And that's pretty much been the color. Within the Nifty, of course, I earlier flagged off what the losers have been like. It's been a flat session for names like Adani Enterprises, L&T, as well as SBI and ONGC. That's it then for this edition of Closing Trades then. Tomorrow, of course, is a market holiday, but we'll pick up all the action on Wednesday morning.